over the trades on the day. Challenging trading day once again. This market in February is very tough. Not a lot of real price movement, just a lot of random back and forth. Price actions make it very difficult to trade. Minus 71.95 hypotheticals, minus 78.50 live, and 2 micros, minus 14.39 hypotheticals, minus 15.16.50 live. So our live results were worse than the hypotheticals with extra slippage today. This is the first trading day of the week, so minus 78.50 on the week, minus 11.557 on the month, and plus 17.200 on the year. The hypothetical end-of-day drawdown is minus 28,000, and we are at a worst-case drawdown. Here is the portfolio calculator as of Friday. We were about $1,400 away. One of the things we do is we do anticipate degradation of our trading systems, and in the market environment like we're in right now, it's just extremely difficult. There's really just extremely unfavorable price action. We're used to this type of price action, but we're used to also having it cycle back as well. So today we had a gap up in the market, and then we had this last Thursday gap down, PCE accelerated, and then it traded back against just mean reverted back, and then popped up towards Thursday's close. Tried to do a gap continuation, ran the lows, and then chopped around. We were net long, and when we got net long, there was a fast move down, and then we ended up getting net short, and then fast move up, getting net long here. And so it's just really difficult to trade this price action. Smaller and smaller ranges, you can see that here. Quick drop off. You can especially see that in the NASDAQ. The average range of the last 5 days really has dropped off in a big way. And so we typically see cycles in the month of between favorable price action and unfavorable price action. This month we have not seen a lot. We didn't start trading until the 14th, and we sat out a lot of it. And so we've been able to reduce our losses and do better than the hypotheticals. But you can see here this quick drop off in the average range, and you can see that's the lowest average range of the last 5 days. That's the lowest levels in going back to about 2022. It's kind of the same levels as we saw back here in August of 2022, but at the lower end of anything we saw in 2022. These models, they work well going back even in 2021 and 2020 and further, but just this quick drop off is indicative of just very choppy random price action. You talk about the random walk theory in the market lately. As far as our systems are concerned, that market has been very random and difficult to trade on an intraday basis. Let's look at the trades on the day so you can see what I'm talking about. We were 1 for 8 in the NASDAQ futures. Viper, first trade was a winner, second trade was a loser. Take count trend, first trade the winner. First trade was a loser, second trade was a winner. And then tick pullback, got long early, no follow through on this trade. We've had a lot of success in the past on these gap ups, and it started that way. We're coming to the end of the month. I thought the market should go down, but the liquidity wants to drive it up. But it failed. It rolled over, but it wouldn't go down either. And so we talk about short fighting. We're also just seeing trend fighting in general in the markets. The market just seems to change directions as soon as there's any indication of a trend in one direction. It changes in the opposite direction. I've also looked at my counter trend strategies. Those were down on the day. Tick reversal, one of our hottest strategies, was down on the day. These strategies have made recent equity peaks. Cobra 3, tick reversal 2023, tick reversal, and they struggled in this market today as well. Momentum reversal had a small gain, and so we were 1 for 9, but the one winner was extremely small. And so you can see, let's see, 1, 2, 3, 4, 5, 6, 7, 8. Let's see, it's really eight strategies that were down today. 7 strategies. So 1 for 7 in the NASDAQ, and the S&P 1 for 1. We had Cobra 3 stopped out right away, and the market was grinding higher. Like I said, it's a familiar pattern for a gap up and a continuation as we come into the end of the month. You would think that the bulls would want to drive it higher, but the market dropped. It seems the sentiment seems, at least the speak from the bulls, seems very, very bullish, regardless of the fundamentals. So this sell-off makes sense to me, but it seems like there would be more buyers coming in trying to drive this market. 4 losers in a row in Cobra 3, and it's been one of our stronger strategies. Momentum reversal. This was the trade of the day on the S&P. The S&P was weaker than the NASDAQ from the open, and so there was a larger gain. And so 1 for 1 on the S&P, 1 for 7 on the NASDAQ. 1 trading day left in the month. Tomorrow is the last trading day of February, and then we start March, and we've been in this pattern where we have a tough beginning of the month, and then the market kind of resolves and has some more favorable price action. Decides to make a move one way or the other towards the end of the month. This month, just no such direction. We've had February the 1st started here. First 2 days were pretty big. Then we spent most of the month chopping around in that range, and then recently we've taken out that low, but it's been very choppy around this low. So the market, every time the market tries to go low, it gets really, really choppy. As the bears try to get control, it gets really, really choppy. And so there's just this very tight range-bound fight between bulls and bears. As ranges get narrower too, ranges are narrowing, and just a very hard market to trade. So we do have one trading day left in the month, and then the cycles. You typically see cycles. It would be great if we could have perfect cycles, like a sine wave, and we could time those cycles. But those cycles are not perfect. Sometimes you get long cycles in your favor, and then long cycles against you. And then it'd be great to have just a perfect cycle, and you could just get in at the beginning of each cycle. And the markets and trading are not that cyclical as far as timing perfect cycles, and so we've had a tough month of chop. What I've seen historically, when we have a month where just really nothing happens, then it can flip on a dime. And so last year, March through towards May was one of our top trading periods, and so we had some pretty big gains March through May. And then last year, January and February, we had a tough start. We were down coming in, really, really steep losses in January last year. And so we were able to mitigate, and we're up in January and February a little bit. It wasn't our strong point last year in live trading. And then March through May was our strong point in live trading. So I'm looking forward to that. And so these narrow ranges and difficult price action tends to be cyclical. And so as we come to the end of one month and start a new month, the cycles can change, and the more favorable price action could be in the next few days. So we are looking for a bounce, and the reason we start in a drawdown, so that if we get a worst case drawdown like this, we can hold for a bounce back. So markets, similar to stop running, markets change, and we expect degradation over time. And so we wait for a drawdown for technical errors and for worst case drawdown, so we can get that bounce back. And so that's what we're looking for now, is looking for a bounce back as we come into the end of the month and start a new month, as March trading starts on Wednesday. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.